Hi everybody and welcome to the London session update with myself, Kathleen Brooks, for Monday the 24th of June 2013. We've just come off the back of an absolutely pivotal week. The fundamentals that came out for last week, they're going to determine the direction of markets for months, we think. And the key thing that is still the main theme coming from that Fed meeting from last week is the stronger dollar and the potential for a stronger dollar. That is feeding through into a fresh week. We've seen sentiment is still a bit cautious, but the key thing to watch is this dollar move. And there are two key pairs that we're watching at today that are approaching really important levels. Let's start with dollar yen. Now, this is the daily Ichimoku cloud for dollar yen. As you can see, it is testing the bottom of that cloud. Now, that is a really bullish development. That key resistance level comes in at 97.95. If we can get above there, it suggests two things. Number one, that the downtrend that we've been in since kind of the beginning of June is over. And number two, that we could get to the top of that cloud, which also corresponds with a very important 100 level. So the top of the cloud is just over that at 125. But this is a massive, this would be a very important break. If we can break and close today above 98, say 98.15, 98.20, very, very bullish development that would open the way to 100 in the very short term. Now, the other pair that we're looking at very closely, again, part of this stronger dollar theme, is the euro. So the chart in front of you shows the euro dollar and 10-year treasury yields. Now, 10-year treasury yields were the major mover last week, and they really are kind of the center of the financial system. If treasury yields are on the move, and they moved at their fastest pace for a decade last week, they continue to push higher today. They're above 2.6%. Remember, last week, people were talking about 2.5%. being a very important level that could change the outlook for markets. Well, now they're above there, so that change is now our reality. So what we've seen with euro dollar is that it has continued to fall, but it's being supported at the moment at 130.80. That's a very important support level. It's a cluster of daily moving averages. However, even though that's holding for now, we think if treasury yields continue to move higher, which we'll be watching very, very closely, that does really spell further declines for euro dollar. We're not saying that euro dollar is necessarily going to go through the floor, because remember, the ECB's balance sheet is still shrinking, and the Fed's is still increasing, even at a slower pace. However, we do think that sentiment really is very positive for the dollar for the moment, and that we could see the euro continue to sell off. If we get below 130.80, that's a short-term, very bearish development for that cross that could see us back to 130, psychologically important level, and then even 129.60, which was a bit of a sticky zone there in the middle of May. So we're going to be watching that very, very closely. But good luck trading for the rest of the day, and please do join us soon for more. Thank you.